With the euro US dollar dropping drastically to the downside and the dollar as well going to the upside, a lot of traders and analysts are anticipating what is the market going to do. They're wondering, is the market going to continue to the downside on the euro, or are we going to see a potential reversal? And in this video today, I'm going to share with you my thought process, key levels I'm watching for euro and for dollar as well. And the first thing we're going to do is we're going to first look at the dollar. Where are we in the marketplace? And what is the overall market structure? And so far on the dollar, the overall market structure on the 3-month time frame, 6-month time frame, 12-month time frame, market structure consistently creating lower highs, lower low, lower high, and right here we'll have a lower low. So we're still within the range lower high and lower low. So there's no telling what the market is going to do where we are right now. The next thing I do is to go to the monthly time frame. And on the monthly time frame, there's not really so much to work with. But first thing to notice is if we use the Fibonacci from this low, this overall low here to this overall high, you can see that we're pretty much at a premium zone. So if we're at a premium zone within the monthly key levels, I'm not going to be looking for a buy for the dollar. And if I remove everything on my chart for a second, you can also see we have this monthly inefficiency restaurant right here at a monthly premium zone. Now, let's take a look at what is happening on the weekly levels as well. If we go on the weekly levels, using the Fibonacci from the low to the high, you can see right here, this is equilibrium zone, and we're nearing that equilibrium zone. And look what's resting above that equilibrium. Inefficiency, fair value gap, imbalance, you can call it whatever you like. And after that, we'll go to the daily time frame. And on the daily time frame, look what we have here, high resistance liquidity. And we've had this explosive move to the upside. Now, I actually expected this to happen even when price was around this key level. Now, nobody knows what the market is going to do, whether it's going to hit this equilibrium, enter premium, and we'll see a reversal. Nobody knows whether that's going to happen or not. But for me, what I'm going to be doing is I'm going to be watching price really very closely the moment we head into premium on the weekly levels, because we're already at premium from the monthly levels. But when we go into the premium zone at the daily and the weekly levels, and we'll come into this high resistance liquidity zone, I'll be watching price very closely to see what the market is going to do. And if we now take a look at Euro US dollar, Euro US dollar is also at a very nearing a very critical level as well. Euro has been dropping to the downside. If you've been watching my videos, even literally when Euro was around this key level, I've been talking about Euro coming down here. And the reason, number one, this low resistance liquidity, number two, the inefficiency, and number three, because of this, was the last move to the ups. This was a high, a low, and a break of structure. So I was anticipating to see a potential retest before we continue to the upside. And if we look at this on the monthly time frame, just something I usually do. And right here, you can see this right here will have the last monthly down close candle on the monthly. We have a last down close candle before an expansion that broke this high right here. Now, this is a very, very, really advanced and complex way I look at the market. Is really very advanced and complex when I use the line chart. So if you don't understand how to do it, it's not mandatory for anyone to learn how to do this. This is just my personal strategy of how I view the market. Sometimes when it's not clear on the candlestick chart, I use the line chart to make it a lot clearer. And the reason why that last down close candle on the monthly is very important to me is because if we're going to see a reversal on the euro, I would anticipate for that to happen within this key level. That is the key level that I will anticipate for a reversal to happen if we're going to continue to the upside. And I'll be targeting this previous high right here to get taken this previous high. That will be my target overall. And don't forget, on the 12-month time frame, euro still remains bullish. So any move to the downside, I'm looking for opportunity to buy the euro to continue higher. Now, that is just my thought process, and other traders will have different opinions. And what I'm watching so far is for price to come in there, and you can see this orange colored zone. That is the last down close candle on the monthly using the line chart. And if we go to the 4-hour time frame as well, you can see on the 4-hour time frame, we'll have this high, this low that got broken. I want to see a retest here if I'm ever going to look for any buy setup. I want to see price come there. But it doesn't mean that price coming in there, I'm just going to randomly look for a buy and just buy from any zone. I'll still wait for a confirmation entry, which is a smaller time frame break of structure. It could be a 5 minutes break of structure, or it could be a 15 minutes break of structure. It all depends on what I see and how confident I am with the zone price as mitigated. So for example, if we mitigate this high right here, I potentially prefer using a 15 minutes break of structure. But if we mitigate here, I prefer to use a 5 minutes break of structure. But at the end of the day, nobody knows. Price could still come down here, smash these lows and continue lower. Another thing I'm watching is this is a high resistance liquidity zone, because this down close candle right here, it came down, took external range liquidity before breaking structure to the upside. So if we're going to see any sort of strong support zone, I would anticipate for that to happen from this key level. And you can see how I always outline everything on my chart. Weekly last down close candle, trend is bullish, intraday extreme discount, because if we use the Fibonacci from this low to the high right here, this key level is our extreme discount zone, and we're nearing that zone. And tomorrow is we're heading into Wednesday, and Wednesday, if I'm anticipating to see a reversal, I usually anticipate for that to happen between Tuesday and Wednesday or Thursday, a reversal and then continuation to the overall market direction. But now this doesn't mean for certainty every single Wednesday you just go into the chart and start looking for a reversal. It's not how it works. There are a lot of other intricacies behind that, but it's just something to also consider. And you can see other things I'm watching here for our break of structure. So anticipating for a retest, which I talked about right here. This is the retest key level. And we also have to wait for the intraday time frame, which is 5 minutes or 15 minutes to break before we now start looking for a buy to align the bullishness from the 12 months, 6 months, 3 months, and other higher time frames. So this is what I'm watching for euro and also for the dollar. And if you found it insightful, give it a thumbs up, and I'll see you in the next one.